Hello, folks. We apologize for a little bit of technical difficulties we had today with this evening, but we're going to get this started, and we're going to start off with going with last week's news to kind of piggyback off of what the market did last week. Last Friday's stock markets, they kind of finished a little mixed. The Dow Industrials and the NASDAQ Composite, they posted tiny gains on Friday, and they were down for the fourth consecutive day. Even though trading, it showed a little positive conviction. Producer price data last week, the level continued to show no signs of inflation, and at the wholesale level, although market participants appeared unsure whether what they were going to do, waiting to see what Big Ben said.
Right.
So
and towards the end of the week last week, you did see a couple of breaking down of correlations in the markets to see a lot of confusion. I think most were just waiting for the big Fed announcement that we had this week.
Correct. And like I said, going off of that, last week there was a mostly muted response from the Labor Department last week, reporting as expected a 0.1% decline in the November producer prices on the core index reading, which excluded the volatile fuel costs, which rose 0.1%, also matching Wall Street expectations. Okay. So it was the third month in a row that prices were at the wholesale level had fallen. It was the first time in just over a year that those producer prices had declined for such an extended period. In those 12 months through November, producer prices were up 0.7%, and that's a rise of 0.3% since October.
Okay. Quite a bit of an increase that we saw there.
Yeah, we had a little bit of increase. They small increase, but we all know what it was about. That Santa Claus rally. We all can't wait for that Santa Claus rally. We're only 8 days away from. We got 6 days.
Yeah, six.
Today's the 19th. We got 6 days. So it's
Michael,
going to be.
Aren't you in the Christmas spirit?
I'm trying to be. Ho ho ho. I may not be, but or trying to be, but I tell you what, Big Ben. He's in the giving spirit.
Yeah, he's definitely have our stocks on the roar. I'll go ahead and jump into that.
Right.
We all have been waiting for it, and the Fed has finally announced that they're going to taper back some on their stimulus package. They're going to reduce the already $85 billion of purchase of assets, reduce that down to $75 billion. Okay, and
yes,
on this announcement, there was a 2-day meeting. And it concluded on Wednesday, and after the announcement came out on 2 p.m., stocks roared. Okay, the Dow and the S&P 500, they closed at all-time highs. The Dow added 293 points, folks. That is a strong sentiment, especially off of a pullback in the morning that we had early Wednesday morning. Also, to add to that, we had the S&P 500 index. It rose 30 points. To 1.7 to close around 10.65, surpassing its previous record close on December 9th. Also, the NASDAQ was up 16 points on its close. The main sectors that led this rally was financial and healthcare. Also, Apple hampered the NASDAQ rally a little bit, had a little bit of a pullback on that.
Apple's been kind of been holding the NASDAQ back. A lot of times people say as Apple goes or as the NASDAQ goes, so does Apple, or vice versa. As Apple goes, so does the NASDAQ.
Yes, I think it's fair to say that Apple has a very much weighted value in the NASDAQ composite.
I would wager to say so. The stocks ended today. We had kind of a mixed, kind of moderate tapering off. They were a little bit mixed. We had a little bit push up in the Dow towards the end of the day. But folks, it took a breather today. But come on, we were up 300 points yesterday. So
Yeah, what more do you want?
Right.
The market has to take a breather, and that's in any significant move that you have. The markets just don't keep going higher and higher.
Absolutely not. They either have to take a breath. If you're out there jogging or if you're out there doing exercise, you're going to take a breather, relaxation, and to be able to wind down, and to be able to kick it into another gear to go maybe another little bit higher.
Well, I don't know. You may be Forrest Gump. Who knows?
Possibly. I'm going to put my running shoes on and run Forrest Run. So, with that, we also with Big Ben. Big Ben is, like we said, going back to that. Big Ben has been in a very, very giving spirit. I think what Big Ben is going to be he's trying to be Santa. You know, he's going to say, "Hey, I'm going to ride this sleigh all the way out of here," and you know, he sent the markets in a uproar right before his last Fed meeting. He just
Right.
he decided to do the tapering, and that just it just catapulted his his ride off into the sunset.
Yes,
would
I
say.
definitely think he's trying to send the markets off with a bang as he's going to be leaving in I believe the early of next year. I believe
Yes,
it
correct,
is.
correct. Yeah, Janet Yellen.
But
will be
to
speaking.
those that don't know, Big Ben is the Federal Reserve President, Chairman,
Yes.
excuse me, Ben Bernanke, and that's who we mean on the streets on Wall Street. Everybody refers to him as Big Ben.
Correct. Folks, just the one thing to remind you of, we will be having a Q&A after this period and after our Bull and Bear session. So feel free to type in any questions that you may have either prior to or after, and we'll be able to take a look at them during our commercial break, which we should be coming up on in a couple few seconds. And just type those in. We'll address them and answer any questions that you may have. Okay? So we'll see you in a little bit, folks.
The stock market has enjoyed historic growth over the last few months. Don't miss out on your opportunity to share in the wealth. International Intelligence presents Learn to Trade Live with Tony Laporta, a 34-year veteran of the Chicago Mercantile Exchange and the London International Financial Futures Exchange. Included with the class, 1 month free of Tony Laporta commentary and key pivot points. Call now to reserve your spot for an introductory class on January the 8th or the advanced class with Tony Laporta January the 9th. Call now or find us on the web. Begin your future in financial trading.
Also, welcome back, folks. Also, some of the news that I want to give out to you guys is also in our 10-year Treasury yields, that was up 4.4 basis points to 2.89%. Gold futures were volatile this week and the end of last week. They settled around 12.35 an ounce. Actually, let's speak about the gold futures for a while because we've seen a decrease in the price value since maybe around the summer, and a lot of analysts was looking for a gold to go back up to 14.
Right. Well, with the market being up strong, gold was referred to, used to be a kind of like a flight to quality.
Correct.
When we were in the
Correct.
turmoil, a lot of people started going to
Right,
that
they put
the
their money
precious
in
metals.
gold. Right,
Correct.
right.
So, with that, now that we've been, the markets right now, the Dow Jones is up 23% year to date. The Nasdaq is up 26%, and then the S&P is up 34%. So, right now we're at all-time highs. The Dow just set an all-time high on Wednesday on Bernanke's news. So, a lot of that's affecting the gold and the commodities. You've seen that with Bernanke speaking, he made crude oil rise. Him doing the tapering, that made crude oil rise and prices rise per barrel. But the money's kind of dwindling away from those commodities.
So it's so to say it's safe for the average investor now looking to invest their monies and more so looking to get into some solid stocks and companies versus putting it into the bonds in the precious metals.
Right now,
is that safe to say it?
I would say
off
so.
of the performance that we've
Correct.
had, the last year.
I would
or two?
say because stocks have been rallying and they've been rallying and just like I spoke on last week, when something's up, when the market's roaring and you're in a bullish market,
and all-time highs at that.
Close your eyes and buy it.
all-time highs, folks. So
if we would have bought it last week when we also we're looking at it last week, guess what? You probably be up in your portfolio pretty nice, and you'd have a nice Christmas coming in.
yeah, you're definitely in the world.
Your wife would be happy, and then you can buy your son that GI Joe with the kung fu grip. So it would be okay. It would be all right. So we had Facebook today. Facebook came out with some major news today. They were selling back 70 million shares that they had. 40 million was owned by Zuckerberg. Of course, and
finally got rid of some of the shares. He
right,
was sitting
correct,
Okay.
and he dumped about 42 million of them today.
Okay.
But there again, he's playing Santa because guess what? Towards the end of the year, you need those write-offs. So
Right.
he's going to make those
Right.
charitable donations, which I think is great. I
Right.
think that that has to be done, as well as with the other 27 million. Those were owned by the company, pretty much Facebook by itself. So I think that Facebook's going to do something. They're right now. I believe I think they're up 6% week to date, and they're up 126% in the last 6 months, and for the year they're up 106%.
And
So
off of this IPO pullback, Facebook has had a significant rally from, I believe it was the $16 or $18 price point.
Correct. Yes, it
and
did.
It has
Yes, it
been
did.
on a tear since.
Absolutely. So
So those who that got in at the initial IPO, they're not feeling so bad right now.
absolutely not,
You know,
because when they came in, when it initially IPO'd, I think it IPO'd
$38 around
38, and then
36,
pulled back,
$38,
and everybody was like, "Oh, they
Right.
thought it was a trouble." Well, guess what? When you're smiling, and today it's trading at 55.08, who's smiling now? So I would say that Facebook, keep smiling. You're doing well. You're doing well.
Correct. Well, for some of the downers that we have, some of the downers.
Always got to have a
movers,
downside.
Correct. I'm sure that you've heard of this story. J.C. Penney.
Yeah.
We've all heard of
Ron
it.
Johnson.
Yeah, just this month, J.C. Penney has dropped 22%. Just alone in this month.
Wow.
While Macy's has only dipped 1%.
Well,
Wow.
I would wager to say I would know who I'd want to be buying versus selling.
Yes,
Yes.
definitely agree. And Kohl's only has dropped 0.9%. While saying that, the biggest dropper of them all is, take a wild guess who we have. Sears.
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 Sears has been battling. They're struggling. They are
Drops 30% this month so far.
That's tough.
That's a tough month.
And they've been around a long time.
Yes, and I don't believe they met earnings, so that's a tough one. But also getting back to Pennies, after a 2-year decline, the department store chain is trimming some of its high-profile brands and deciding to stick to some of its own. They've even gotten rid of Martha Stewart's Design Home Furnishings, Joe Fresh Clothing, and they're starting to try to stick with and expand some of its own, like St. John's Apparel. The future doesn't look too bright for JCPenney's.
What do you think with that new CEO coming in that took Ron Johnson's place? I believe what is it, Mel Norman?
Yes.
Do you think that you think he can get it turned around? You think he might be able to right the ship?
That's a big job at hand, and we'll see in the near future. But it's fair to say that Ron Johnson, he did a fair number, with JCPenney. He tried to turn around. Some would say he had big ambitions and goals. We would say it was too big.
The little lofty goals.
Correct.
Very lofty goals. Correct.
Along with that, the SEC has issued a statement reported about curiosity of JCPenney's liquidity cash, their equity offering, and their debt numbers. Now, this is just a concern for the SEC. There's nothing formal as of now. And their main objective is to take care of the shareholder and some of the corporate practices that go on.
Correct. Okay, folks. Well, we're going to take a slight minute commercial break, and we'll be right back to you in a few minutes with our phenomenal trade, which is going to be right here in our own backyard. We got a moneymaker for you, folks. Stay tuned. We'll be right back.
The stock market has enjoyed historic growth over the last few months. Don't miss out on your opportunity to share in the wealth. International Intelligence presents Learn to Trade Live with Tony Laporta, a 34-year veteran of the Chicago Mercantile Exchange and the London International Financial Futures Exchange. Included with the class, 1 month free of Tony Laporta commentary and key pivot points. Call now to reserve your spot for an introductory class on January the 8th or the advanced class with Tony Laporta January the 9th. Call now or find us on the web. Begin your future in financial trading.
Hi, welcome back, folks. Got a great one for you. Great opportunity right in our own backyard. We're coming to you live from Atlanta, Georgia, and in our own backyard we have one of the most phenomenal trades that's been going on for the last I've been watching it since it pulled back, and they were talking about moving this company out of Atlanta, which we all kind of knew it wasn't going to happen.
Right.
And that's going to be Delta Airlines, folks. What a great company. Right now, Delta Airlines, they are up 131% year to date.
Say it again.
131%.
Year to date?
Year to date.
Oh, wow.
Can you believe that? I mean, any company that's up 131%, I'm looking to buy that company, because that tells me that they have some strong earnings, and they made some great purchases, in merging with a couple airlines or a airline, and now they're taking over the market. They were rated by the UBS as a top pick on the company's ability to generate cash above all their peers. So right now, that's how strong they are. They're backed up but the shares of Delta today rose following the initiation, which was bucking the declines of all the other ones across the sector. Delta was up 1.4% at 27.50. Which is near the high end of its 52-week range, which was from $11.43 a share to $29.43 a share. So
I'm sure some of that is due to us coming into the holiday season and traveling starting to increase.
yeah, I would say that along with that merger that they had made, and Delta pulled back. I've been watching Delta, honestly, since it was pulled back around.
It's one of your top picks, isn't it, Mike?
Absolutely, of course. I'm always going to have the top picks.
Yeah, love to support
why
the
not?
whole team.
Of course,
I
of course,
agree,
of course.
agreed.
So with that, keep striving, keep flying the gray skies, Delta. We're behind you because guess what? I'm going to fly Delta, and y'all should too.
Well, another great stock that we have is not in our own backyard. It's actually across the country, but it is a great, phenomenal stock, and that's Nike. Yes,
Great company.
Nike is great.
I love Nike. I'm
Yes.
a shoe head, as they call it. I'm a shoe head.
Well, you'll love some of the news that's coming out of Nike.
Great.
It just reported earnings. We had 59 cents a share, missed by expected 58 cents a share. Revenues reported around 643 billion and expected from 644. So we didn't quite meet expected revenues, and reports are blaming that on North American sales.
Yeah, they probably. I would say Nike kind of dropped. They're doing well over in China. We know that.
Right.
Nike's done.
The
done
Asian
well.
markets are doing phenomenal.
Excuse me. Yeah, the Asian markets, correct. So North American sales have dropped, but guess what? We know coming into this time of year and going into the first quarter,
Correct.
what do they do? They usually end up taking off because we have some events that go on come in February, and so a lot of people are debuting the new shoes and things like that.
Actually, to piggyback on that, they're going to start launching Kobe Bryant's campaign for.
I'm in line for him. I got to back my boy Kobe up.
For his Kobe 9s. Nike is preparing a big campaign for the new shoe release. I think the price point for the shoe is going to be around $200, and they're expecting this shoe to sell off the racks over there in the Asian markets.
I believe
sure
it. Kobe's he's world renowned, so they're gonna support Kobe with that, and I believe he had if I'm not mistaken, he had a big part in designing the shoe because he made it a little bit higher on his ankle.
Correct.
Now it wasn't from what Kobe said, it wasn't due. He had already started doing that prior to his injury. So I guess as he got up, me being an ex-athlete, I've broken my ankle a few times, so I understand, you want that good ankle support, as well as Kobe and I, we kind of had the same injury because we both have torn our Achilles. So, I can empathize with him and see where he was going, the direction that he's trying to take that shoe. So I think that's going to be a great product for Nike. And come February, you're going to see that Kobe fly off the shelf, along with more than likely LeBron would be debuting something.
Of course, LeBron's the top seller. I just read a report today, actually, that he just jumped over Kobe Bryant.
Well,
number one selling jersey in the NBA.
Wow.
So congratulations to you, LeBron.
Yeah, congratulations. Keep doing your thing, fellow Ohioan, as we like to say. So keep doing your thing. We'll see you all in a minute, folks. We're going to take a slight break, and we will be back with you in a few minutes. Like I said, don't forget, feel free to type in any questions that you have, and we'll touch those as soon as we get back.
The stock market has enjoyed historic growth over the last few months. Don't miss out on your opportunity to share in the wealth. International Intelligence presents Learn to Trade Live with Tony Laporta, a 34-year veteran of the Chicago Mercantile Exchange and the London International Financial Futures Exchange. Included with the class, 1 month free of Tony Laporta commentary and key pivot points. Call now to reserve your spot for an introductory class on January the 8th or the advanced class with Tony Laporta January the 9th. Call now or find us on the web. Begin your future in financial trading.
Hey folks, welcome back. We're going to speak a little bit about one of my all-time favorites. I love trading these commodities. I'm a crude man. Me being raised in Texas, I've been around a lot of oil guys, as we like to say, and I like to rub elbows with them. Crude rose for the second day after Federal Reserve said would reduce its stimulus as the nation's economic outlook improved and the U.S. fuel consumption increased. So with that, Bernanke with him saying that the economy's in overall, we're in a great place. Well, that helped the crude prices, and it ended up shooting up and shot up, I think, as high as it should have been around $99 and I think 44 cents. It was the high today.
I think that was the high of today.
That was high today.
Correct.
So it's pushed up. It had just made a low, I believe, a couple weeks ago of $91.77,
Correct.
and it's been on a straight up tear from there.
And that pullback was actually off of setting the high around, I believe that was the year high around 112.
112, correct. 112.43, I believe.
Correct,
Yeah,
correct.
correct. So that was a nice pullback, which now we're back, and it looks like it's going to go back and test the $100 barrel mark, and the petroleum demand. As long as the petroleum demand is increasing like it did last week, then that's the most it has been since 2008, according to the Energy Information Administration. The Fed signaled that the economy it was in a better shape than people had expected, than they thought, and that's very, very bullish for crude oil. The WTI for January delivery, which expires today, that contract expired today. It rose 45 cents to 0.5%, which or 0.5% to $98.25 a barrel, and that was at 10 o'clock this morning. The more active February contract, it gained 50 cents, and it was trading at $98.56. The volume of all that futures traded was like 31% below the 100-day moving average, or 100-day average. Brent for February, the Brent crude for February, it settled advanced about 29 cents, or 0.3%. And the London-based ICE futures, and that was based on the London-based ICE futures, which was 109.92 a barrel. The volume was 31% below 100-day average, and the European benchmark crude was at a premium of up $11.36 for the same month versus yesterday. So, crude, it's a volatile animal. It's a volatile animal, and you have to do your due diligence when you're
trading or investing.
Thank you.
Yes, you definitely want to take a conservative approach if you don't have the experience in trading or investing the crude markets.
If you want to gain the experience, what would you do?
I would say you need to contact International Intelligence at 404-942-4440, or you can log on online and catch us at interintel.edu. But also to piggyback off that, I honestly think that they're not seeing the average retailer, they're not seeing that price increase at the gas pump.
No, they're not, and that's what's letting us know that our that's what's letting us people know that, hey, the economy is, it's better than we're thinking. They're not hitting us in the pocket. They're just doing it by the bond purchasing. Bringing it down. So they're going to deflate the economy in that way. Excuse me, not deflate the economy, but increase the economy, but keep the gas prices where they're at to not hurt the consumer.
Right, the average consumer's pocket.
Right.
Going to the gas station and seeing $4 a barrel, $4 a gallon, it was nothing, that you wanted to see.
No. I like where gas is right now. I'm happy to go. Hit the road trip, and I'm looking to take a nice little holiday road trip to go see my family for Christmas down south.
Great.
Watch out, Florida sun, here I come. So, but yeah, don't hurt me at the pump because I don't mind traveling the highway, but.
Let's take a moment to see if we have any Q&A questions.
Absolutely.
And see where we are with that.
Okay. No questions, folks. Well, I guess we're pretty much explaining this to a level that you all understand. But again, if you don't understand and some of these things that we're touching base on, we can teach you to understand these things and teach you the level of what you need to know to be able to understand what we're using and how to trade these stocks and how to become more profitable in your investments. And if we can do that by calling International Intelligence, again, at 404-942-4440. Again, that's 404-942-4440. And we'd love to spend some time with you and, show you how to become more profitable. And so let's start 2014 off right, because Santa Claus Rally runs all the way through.
What better way to do it? I always like to tell people, an intelligent trader can be a successful trader.
Absolutely.
Happy holidays, folks.
Merry Christmas. Ho, ho, ho.